Top 10 Investments to Become Rich. Start early and stay consistent. Getting rich doesn't happen overnight. It's not about winning the lottery or stumbling upon a miracle stock. The real secret? Smart investing and starting as early as possible. Wealth builds over time through consistent, well-informed financial decisions. The earlier you start and the more disciplined you are, the more your money can grow thanks to the power of compound interest and long-term gains. But what should you invest in? If you're new to investing, all the options can seem overwhelming. Don't worry, we're going to break down the top 10 investments that have helped many people grow their wealth steadily. This video is recorded with clarity so that anyone, even a complete beginner, can understand and get started on their wealth-building journey. 1. Index funds. What it is? An index fund is a type of investment that tracks a specific market index, like the S&P 500. Instead of picking individual stocks, you're investing in a large group of them all at once. Why it works? Index funds are simple, low-cost, and historically offer solid returns, around 7 to 10% annually on average. They're considered one of the safest long-term investments because they're diversified, meaning your risk is spread out. Best for beginners, busy people, and anyone who wants a hands-off, low-maintenance way to grow wealth over time. Pro tip: set up automatic monthly contributions and let compound growth do the work for you. 2. Rental properties, cash flow plus appreciation. What it is? Buying real estate, like a house, apartment, or condo, and renting it out to tenants. You earn money from both the rent and the property increasing in value over time. Why it works? You can make money in two ways. Cash flow, monthly rent from tenants. Appreciation, the property's value may increase over time, letting you sell it for a profit. Best for those willing to be hands-on or hire a property manager, and those looking for both short-term income and long-term wealth. Pro tip: buy in growing neighborhoods and understand the local market before you invest. 3. Your own business, scalability. What it is? Creating and running a business, either online or physical. This can range from e-commerce and freelancing to offering services or selling products. Why it works? Unlike a job where income is limited to your time, a business can scale. That means it can grow beyond your hours, employing others, selling more products, or reaching more customers. Best for driven individuals willing to take risks, learn new skills, and solve real problems. Pro tip: start small, validate your idea, and reinvest your profits to grow. 4. REITs, real estate investment trusts. What it is? REITs let you invest in real estate without owning any property. You buy shares of a company that owns and operates income-generating properties, like malls, apartments, or office buildings. Why it works? You earn dividends from the rental income these companies collect. It's like owning real estate, but without the hassle of tenants or maintenance. Best for those who want exposure to real estate but prefer passive investing. Pro tip: look for REITs with a strong history of consistent dividends and low fees. 5. Dividend stocks, passive income. What it is? These are stocks from companies that share a portion of their profits with investors in the form of dividends, usually paid quarterly. Why it works? You not only benefit if the stock price goes up, but you also earn regular income just for holding the stock. Best for investors seeking consistent cash flow and long-term appreciation. Pro tip: reinvest your dividends to buy more shares and accelerate your wealth growth, a method called Dividend Reinvestment Plan, or DRIP. 6. High-yield savings, liquidity plus security. What it is? A high-yield savings account is just like a regular savings account but with a much better interest rate, often through online banks. Why it works? Your money is safe, usually FDIC insured up to $250,000, and it earns more interest than traditional banks. You can also access it anytime, making it great for emergencies. Best for emergency funds, short-term savings, and people who prioritize safety over high returns. Pro tip: use high-yield accounts to park cash while saving for big goals like a down payment or vacation. 7. Private equity, long-term growth. What it is? Investing directly in private companies, not listed on the stock market, often through venture capital funds or private investment groups. Why it works. If the company grows or gets bought out, you could earn a large return on your investment. It's risky, but the payoff can be huge. Best for high net worth individuals or investors with extra capital looking for bigger, long-term wins. Pro tip: do deep research and only invest what you can afford to lose. Consider platforms that allow smaller investors to participate. Yourself, skills, network, knowledge. What it is, this is about investing time, energy, and money into self-improvement, like learning new skills, gaining education, or expanding your network. Why it works. The best return on investment often comes from increasing your own earning potential. A new skill or certification can lead to promotions, better jobs, or even your own business. Best for everyone, especially those just starting out or looking to make a career shift. Pro tip: read books, attend seminars, take online courses, or get a mentor in your field. 9. Side hustles, extra income plus tax benefits. What it is. A side hustle is any small job or business you run alongside your main job. Think freelancing, dropshipping, tutoring, content creation, or rideshare driving. Why it works. Side hustles increase your income and give you tax write-offs if done as a business. They can also become full-time ventures over time. Best for people looking to build income streams without quitting their day job. Pro tip: choose a hustle that matches your interests or skills, and use the extra money to invest further. 10. Peer-to-peer lending, alternative income. What it is. Through P2P platforms, you lend money to individuals or small businesses and earn interest as they repay it. Why it works. It offers higher returns than traditional savings, and you get to act like a mini bank, earning income off the interest. Best for investors looking to diversify beyond stocks and real estate. Pro tip: spread your investment across many borrowers to reduce the risk of one defaulting. There's no one-size-fits-all when it comes to building wealth, but a mix of these 10 strategies, applied with patience and consistency, can put you on the path to becoming rich. Remember, start early. Time is your greatest asset. Stay consistent. Small, steady steps beat giant leaps. Diversify. Don't put all your eggs in one basket. Educate yourself. The more you understand, the better choices you'll make. You don't need to be a financial expert to invest wisely, you just need to take action, stay informed, and think long-term. So, which one will you start with today? The sooner you begin, the sooner your wealth journey begins. Let time and consistency work their magic.